G'day and welcome back to AusBiz as we begin a brand new trading week. I'm Andrew Gagan. Great you can join us here for the global view. Let's take a look at what happened on Friday, or in fact over the weekend. Uncertainty and confusion over US trade policy. That's increased with President Trump denying that there's a tariff exception for certain Chinese produced electronics goods, which was announced on Friday. Well, taking a look at how the Wall Street finished on Friday, the main indices ending higher after China increased its tariffs on US imports to 125%, escalating that trade war between the two largest economies. In a wild week of trade, the S&P 500 finished more than 5.5% higher to be almost 13% below its February record high, while the NASDAQ registered its biggest weekly percentage gain in 2.5 years. Amidst the market mayhem, the US first quarter earnings season has begun with JP Morgan Chase, Morgan Stanley, Wells Fargo all reporting better than expected profits, but warned of potential economic slowdown due to the trade disputes. A check of the Mag 7 was mixed, with Apple among the best performers there. That was certainly initially on that speculation that those electronics goods would escape a tariff hit there, but as I said, that's somewhat confusing now. Now, analysts seeing aggregate S&P 500 earnings growth of 8% for the quarter, less than the 12% growth predicted at the beginning of the year. Shares of chip makers with US-based manufacturing facilities fell after Chinese Semiconductor Industry Association's notice on retaliatory tariffs, although Nvidia defied that trend. Copper miners rose, tracking prices of the red metal higher, with US-listed shares of Rio and BHP both gaining. And the gold miners surged, tracking the bullion price higher as well. Well, later on Friday, the Trump administration granted exclusions from the steep reciprocal tariffs on smartphones and a set of other electronics, including computers, laptops, semiconductor devices, and memory chips. However, in a subsequent social media post, the president said that these products are still subject to existing tariffs of 20%. And then later, Commerce Secretary Howard Lutnick said that these electronics would face separate new duties, along with semiconductors, within the next 2 months. Well, this comes after Beijing increased its tariffs on US imports to 125%. Unease over escalating trade tensions and fears of a US recession has seen US consumer sentiment deteriorate sharply in April, while 12-month inflation expectations have surged to 6.7%. That's the highest level since 1981. Meanwhile, Boston Federal Reserve President Susan Collins has sought to reassure markets, saying the Fed does have tools to address concerns about market functioning or liquidity should they arise, and we would absolutely be prepared to do that as needed. Well, the benchmark 10-year US Treasury yield registered its biggest weekly rise in more than 2 decades on Friday, settling at around 4.49%. The 2-year yield rising 10 basis points to be at 3.97%. The US dollar index closed down almost 1% on Friday to be its lowest level in almost 2 years. The Aussie is trading at 63 US cents, and Bitcoin trading around 83,500 US dollars. Well, oil climbed on Friday after the US Energy Secretary said the United States could end Iran's oil exports as part of an effort to bring the Islamic Republic to terms over its nuclear program. Brent crude futures rose more than 2% to $64 a barrel. Copper jumped around 4.5%, while iron ore was up 0.5% to $98 a tonne. And gold soared past the $3,200 mark as the US dollar faltered. Spot gold up nearly 2%, currently trading just at about $3,230 an ounce. Well, let's get a look on what's ahead for the week. Greg Smith joining us from Devon Funds Management out of Auckland. Greg, happy Monday to you. Look, I was just talking about that confusion over tariff policy out of the States. Are we any clearer at the moment, given what we've heard from Trump, from Lutnick, how the markets are likely to interpret this?
Yeah, well, good morning, Andrew. Yeah, I think it's a step in the right direction. Obviously, it's a sort of the soap opera that keeps giving, isn't it? But yeah, if you look at our markets, we've opened up 0.9% the NZ50, so 12,126. So it's the sort of first market to open to give you a bit of a steer. Fish and Paykel Healthcare, that's our biggest exporter, that's up 1.6%, although the operations in Mexico do appear to have an exemption. But Yeah, I think the Chinese official said, it's an initial step. It does seem we're getting these incremental moves. But you look at last week, yeah, the S&P 500 best week since late 2023. Obviously on that pause, then these exemptions around sort of iPhones and chips and the like, and then as you mentioned, Lutnick's sort of providing lots of caveats. But yeah, the reality is, it's sort of an evolving story as we know. But I think you look at the last couple of announcements, it's been quite positive. And I think ultimately, when you step back, are the worst case fears of markets sort of going to be realised when you think back to that board that Trump produced with all the double digit tariffs, and it looks like that's not the case. I think with the announcement on late Friday with respect to obviously good news for Apple and good news for Nvidia, probably an acknowledgement that a lot of the stuff that they might be able to make in America, but they're not going to be able to make anytime soon. So his press secretary, I think she said, America could easily make iPhones there when experts have said it would take 3 years to shift just 10% of Apple's production and cost around about $30 billion from sort of those that are a bit more in the know. So I think that's the real realism there. Also, they want to be an AI superpower. They're going to need the chips to build the factories. So I think this is part of it. Americans also, won't be wanting to pay 30 to 50% more for their iPhones. So I think that's something as well. But I think stepping back, you've seen signs from the Trump administration that they have extended the olive branches to China. China's sort of going the other way and saying, the US is almost economically irrelevant. They account for around about 15% of Chinese exports, but it does seem like things are cooling just a little bit. Although it is, as I mentioned, it's a story that keeps investors guessing.
Yeah, no end in sight though to the escalation between the US and China. I mean, you'd have to say trade between those two countries will have completely evaporated by this point, given where those tariffs are.
Yeah, that's right. They're pretty much Chinese officials have pretty much said, just stop buying American goods as well. But I think still America, as I mentioned, is just a lot more reliant on the stuff it consumes and can probably turn off the taps less easily. And it is all it's all a bit of a nightmare at the moment if you're an exporter. I mean, you sort of having sort of ships in the ocean deciding whether to sort of dock or not, and there's been glitches with the customs agencies tariff sort of markings. So things have certainly seized up. But I would argue that the US, to use Trump's analogy to Zelensky about holding all the cards, I'd actually say that China holds a few more cards than the US right now.
Meanwhile, US earnings season has got underway with the big banks on Friday, Greg. Look, perhaps better than expected, but of course it's all about what comes next.
Yeah, that's quite right. So it's a bit of a sideshow, isn't it? But we do, at the start of the earnings season, typically look towards the US banks. They often set the tone. They always come first. And you'd have to say from at least two of the three banks that reported on Friday, it was a pretty good story. We've got more banks reporting this week. We've got Goldman's, we've got Citigroup, we've got Bank of America. So it does set a useful tone. Obviously, Jamie Dimon talked about the turbulence that the US economy faces. I guess that it's going to be a familiar theme, but everyone sort of knows about that. The numbers themselves have been pretty good. The US economy, as things stand, is in a reasonable spot. So J&J, Netflix, those earnings will be sort of closely watched. Taiwan Semiconductor this week as well. But it is a little bit of a sideshow in many ways with sort of the bigger sort of macro drivers at work. And you sort of almost got to put aside what's in the rearview mirror as well. And I suppose you could also say that about those confidence numbers that you mentioned. Inflation expectations, the highest since 1981. Consumers in the US literally terrified, for want of a better word, but things could easily change. So it is, and that's why these, what the White House comes out with and what China responds with is so important at the moment.
Terrified. I like it. Greg, let's focus on New Zealand, what you're seeing there. What's the latest data telling you about the state of the economy?
Yeah, so we've had a read on our manufacturing sector. We've had a bit of a switcheroo, really, because the manufacturing sector was doing pretty terribly for a couple of years, but it's actually registered its third month of expansion. That was interesting. New orders, they were actually look a little bit weak, though. And weirdly, employment intentions have ticked up, but the other data we're getting saying that employment intentions have ticked lower, and firms aren't looking for staff. So a few mixed messages there. And then I look at the services sector as well. So again, we're a little bit of an anomaly in terms of most sort of countries, that our service sector is in contraction, and it continues to be that way. Sort of we're below 50. Interesting as well, we've still got that, inflation's quite low. We've got an inflation reader later this week, but almost 50% of service firms say their costs are rising, but only 7% intend to put their price up. So that suggests a bit of a margin squeeze there. So yeah, we're still, I suppose, really, and this is what the composite is telling us, that New Zealand is really crawling out of an economic or technical recession. So obviously we had the RBNZ cut again last week, 25 basis points. Where this tariff situation goes will dictate what a lot of other central banks do, as well as the RBNZ, but they don't meet till the end of May. But there'll be a bit of focus this week on this card spending data. There's another dairy auction, but we have got that CPI print, and that's going to be really relevant. We only get them once a quarter, and that could sway, what the RBNZ the next time they meet.
Yeah, there is also some further focus on central banks this week. We've got the European Central Bank, Bank of Canada, interesting to see what sort of statements they make in the face of what's going on with global trade.
Absolutely, yeah. So the ECB, it looks like they're tended towards sort of cutting. I suppose it's the thing, we're dealing with uncertainty as investors, and so are central banks. What do they do? Is the trade situation going to be resolved tomorrow? Is it going to drag on for months? So you can sort of understand why there's a little bit of wait and see. And I think those economies are in a better shape than others. The central bank has a bit more luxury. I'd say New Zealand we don't, but as I said, we don't meet for a while yet. But Europe, they've obviously got some challenges as well, so they'll probably cut this week. I mean, the Bank of Canada, it remains to be seen what they do. And then, of course, it's going to be really interesting to look at those RBA minutes as well, to see sort of what the thinking is there in terms of the next rate cut.
Greg, terrific stuff. Enjoy your week. Thanks for joining us from Devon Funds Management.
You too, Andrew. Bye now.
So let's refocus then, as we just about to get going on the local market. Expectations of a positive start with SPI futures up around 0.25%. Stay with us. We're going to get right across it with Nadine in just a couple of minutes' time.